Hey, welcome back. It's Nolan Mathias from Mortgage 360, and today we're discussing the March mortgage rate update. And some rates have gone up and some have gone down since our February update, and we'll tell you exactly which ones have gone where and which one we think is the best one for you right now. But before we get into it, do me that favor, hit that subscribe button, hit that notification button, please hit that like button so more people like you can see this video, and don't forget about our race to 10,000 subscribers, where one lucky subscriber is going to win their monthly rent or mortgage payment for a month just for subscribing to this channel. It's free, it's easy, and it's definitely worth it. So go ahead, hit that subscribe button. The definitive guide on how to manage your credit, product, penalty, price in that order. It's never been more important to get your mortgage right. Okay, so let's get into it. Let's discuss variable versus fixed rates and where rates have gone since our last February update. And what you'll notice is that variable rates have gone down. Obviously, lenders are getting a little bit more of an appetite for those variable rate mortgages. Fixed rates have gone up largely because bond market yields have gone up. And for the most part, we're seeing on fixed rates a 20 to a 40 basis point increase, while we're seeing a 5 to 10 basis point decrease in variable rates. So I'm going to open up the split screen here and you'll be able to see the rates as I talk about them. Let's start with discounted rates. So for discounted rates, we are looking at right now for insured and for mortgages with greater than 35% down payment, which are the absolute best rates that you're going to be able to get in the market. We're looking at 5-year variables at prime minus 1.25%. or 1.2%. So this is a really great rate. Keep in mind that with discount mortgages, you're often going to have what's called a bona fide sale clause, which makes it so that you have to stick with the lender you're with for the full term, or you have to sell the property to get out of it. So if you are going to lock in, the one risk and the one exposure here is that the lender could dictate that you have to pay whatever lock-in rate they want you to pay if you decide to lock in. So they may be able to take advantage of you if interest rates start to go up and you want to increase your rate. So something to be conscious of. Definitely, I am not a big fan of having a bona fide sale clause or a no refinance clause in a variable rate mortgage. But if you are very rate sensitive and you want the absolute best rate on the market, this is at 1.2%. And that is actually lower than in February. By the way, one thing that you'll notice on this mortgage rate update is any rates that are now in green denotes that the rates have gone down. Any that are in red denotes rates that have gone up. So it makes it easy to know exactly where those rates are going since our last update. Now, as far as 5-year fixed go, this is a rate that has gone up. It is now 1.69%. I think in our February update, we were at 1.49% or 1.44. So this has gone up pretty substantially. 5-year fixed, discounted rate, has certain restrictions, but is, compared to a full featured rate, still a pretty good deal, especially if you know exactly what you're getting into and you're okay with being 100% in that mortgage for the next 5 years. Now, as far as 20 to 35% down goes, and keep in mind that this 20 to 35% down payment range is the riskiest range for the bank. Obviously, any mortgages with less than 20% down have insurance on them, so that is virtually no risk for the bank. As soon as you get to that 20% down payment mark, that is where the bank has the most exposure, so the rates go up slightly. For 5-year variable rates right now, you're looking at interest rates between 1.2 and 1.25%. Obviously, the more down payment you have, the closer you get to that 35% down payment, the lower the interest rate. And at 20% down, you're looking at 1.2. One thing to note is that as of right now, if you're putting 30% down, you're getting the same rates as if you were putting 35% down. That isn't normal, but that's what's happening with variable rates on these discounted mortgages right now. Again, that appetite for variable rate mortgages for the lenders seems to be a little bit bigger than it was a couple of months ago. And then as far as 5-year fixed rates go, you're looking at anywhere between 1.79 and 1.89%. 1.79 if you're putting 30% down, 1.89 if you're putting only 20% down. And again, keep in mind, discounted mortgages, I can't emphasize that enough because it is the bona fide sale clauses and the restrictions that come with these mortgages that potentially make them more expensive over the long run, even though you're getting a lower interest rate and saving a cup of coffee a week. The restrictions on these could end up costing you $5,000, $10,000, $15,000, $20,000 down the road if you don't know exactly what comes with them and what your restrictions will be. Now, moving on to full featured rates, looking at that insured or greater than 35% down payment, you're looking at 5-year variables in the 1.4% range. Last week or last month, this was at 1.45%. So you're saving a little bit more on variable rates as of March than you were in February. And then as far as 5-year fixed, now this is the big one. So back in February, back 2 weeks ago, back almost, I would say even 10 days ago, This rate was at 1.64%. Now we're at 1.94. So it's gone up about 30 basis points, which is a pretty substantial increase. I suspect that this interest rate, by the time we hit June, will come back down and it'll re-normalize, but we actually expect there to be about a 50 basis point or 0.5% difference between variable and fixed. So this is kind of normalizing these rates, but that was a big jump, and it all happened in a matter of two or three days last week when the bond market yields jumped in the US upon expectations that the market was going to pick up and that there was going to be greater inflation going forward. So, keep in mind that you can save a pretty substantial amount of money right now with a variable rate over a fixed rate, about 0.55%, or basically $550 per year for every $100,000 in mortgage that you have. So if you've got a $500,000 mortgage, a variable rate is going to save you about $2,500 a year over a fixed rate as of today's interest rates. Now again, moving into that 20 to 35% down payment range, 5-year variables are now priced at 1.45 to 1.5%, which is great rates, especially considering that these are full feature mortgages, which means you have all the prepayment privileges. You can leave to go to a different lender if you want. You can refinance. These are absolute great rates. This is what most of my clients are taking, is these 5-year variables, whether they're putting 20 to 35% down or are getting insured mortgages. The 5-year variables are just absolutely huge money savers right now, and they limit your exposure to payout penalties down the road, which, by the way, is the single greatest factor when it comes to giving your money to the bank or your equity to the bank, where most people get burned. And the thing that costs people the most money isn't that 0.2% difference in interest rate. It's the fact that they get stuck with an interest rate differential when they have to make a change to their mortgage that they didn't expect to have to make. Now, 5-year fixed in that down payment range is priced anywhere from 1.94 to 2.09. These are probably the most expensive mortgages that you'll see. They're obviously priced a little bit higher than what you would get if you were putting 35% down or if you were getting an insured mortgage. Right now, the most expensive mortgage you can get is a 5-year fixed at 2.09 when you're only putting 20% down. So something to keep in mind there, either getting a bigger down payment or looking at those variable options. I mean, right now, if I had to choose between 1.5% and 2.09% at a 20% down payment, absolutely 100% of the time, the variable rate is going to be the option. So very clearly, as usual, we are big believers in the variable rates. We obviously think that they limit the payout penalty exposure down the road. Obviously, there's some big savings, especially with fixed rates going up now on those variable rate mortgages. So we think that that's where most clients and most consumers should be. If you want to get a mortgage, if you are in need of a mortgage, we are licensed in BC now, Alberta, Saskatchewan, and Ontario. By all means, go to the link in the description below to apply for a mortgage. And you can also download our app so that you can see all of the interest rates that are available to you in your area just by having that app on your iPhone. So if you found this video useful, do me that favor, hit that subscribe button, hit that notification bell, and please hit that like button so more people like you see this video. And don't forget about our race to 10,000 subscribers, where one lucky winner is going to win their monthly rent or mortgage payment for a month just for subscribing to this channel. We'll see you on the very next one. Have a good one. Cheers.